I look at the market and I see four things. I see a world that is unusually uncertain, mostly at the macro level. Economic growth, interest rates, central bank behavior, geopolitics. Number two, I see low prospective returns. The central banks have dragged down the rate of interest. All returns emanate from that, so all prospective returns are at low levels. Number three, I see high asset prices, full, high, not necessarily bubble, but full. Number four, I see pro-risk behavior, because in this low return world, investors are trying to get high returns, and the way the common investor does that is by taking on risk. Usually, I think that's a mistake. So I think that the main choice that every investor has to face is the choice between being aggressive or defensive, and I think this is a time for defense. I think that every strategy can be implemented in an aggressive way or a defensive way, and I think that you should put together a portfolio which has a diversity of strategies, but emphasizing conservative implementation. There are two risks in the investment world. There's the risk of losing money, and there's the risk of missing opportunity. Today, I would worry more about losing money than I would missing opportunity. It's generally accepted that in the traditional asset classes, how you do will be determined primarily, maybe completely, by what the market does, and that there's not much room for skill. The market is so-called efficient, in which most people do about the same. The great thing about alternative markets is that it's possible to add value through skill and hard work. Now, that doesn't mean that if you go into the alternative markets, everybody gets a free meal. What it means is that the people with extraordinary skill can do above average. The people who have low skill levels will do below average. So again, traditional markets, everybody does about the same. Alternative markets, room for value added, room for debacle. You can expose yourself to opportunities like private lending, venture capital, health sciences in the private markets that may not be equally available in the traditional markets. You can also expose yourself to higher returning situations if they work out well. But of course, to do so, you have to take some risks. You have to take usually liquidity risk, novelty. I mean, the truth is that the companies in the private markets are younger and smaller and less established. And then, as I suggested, you have to take manager risk. You have to select the right manager. People have this feeling that if I go into that market, they're giving away money there. Well, that's not the way markets work. Markets don't give away money. You have to find a skillful manager. If you find the wrong one, it'll hurt you. But the right one, I believe, can add value. And I believe that alternative investments deserve a place in every portfolio.